Hey guys, what's up? This is Andrew for TRENDLINES.com. So in this video, I would like to make a big update on AMC. I have to say that it was very tough to make a good analysis in the past few weeks. There was a lot of tricks in this market. So I worked hard. I checked the price action very carefully. I checked all the information as well about the option market, the synthetic short interest, the volumes, and I think I came up with a very strong and solid case. So let's get into it. Alright, so maybe the first thing, guys, I want to show you is this spreadsheet. So it's been a long time you didn't see me showing you guys this. So let's quickly have a look here at what we are having. So this is the option open interest. All right, so here you have all the different strikes. So going from 5 to 145, and I here get all the open interest for all the maturities. All right, so I take the 8th, the 13th of August, the 20th of August, so on and so forth until Jan 23. I then compute the delta myself, guys, using Black-Scholes formula. All right, so this is this formula, you know, guys. I showed you this many times, and it's been a long time I didn't have a look at this because I had some issues with my Bloomberg access, but whatever. Now it's good. And so look at what we are having here. So then I compute all the synthetic short that we're having on AMC. And what is very interesting to see here. So first thing, we have 8% of synthetic short. All right, with AMC at 32. We can go up to 14%. Here, the maximum level I've seen in May, so before the second squeeze, if I can call it like this, was 20%. All right, so we're not there yet. But what I saw after that was around 10%. So we are building back some upside gamma. All right, this is mostly coming from here, guys, from the 145 strike. Look at the number of shares again that we're having here, guys. All right, we're having around 16 million equivalent shares. All right, this is just, you know, insane in terms of option distribution, and you can see how, you know, just big this number of option is. It's the biggest option open interest that we're having at the 400% strike. All right, this is insane. This is going to create a lot of upside momentum if we start to go higher with the gamma. This is what we call the gamma squeeze. All right, market makers, they would have no other choice than just buying and buying once we get closer. Look, for example, if you go to 60, the synthetic short position goes from 1.2 billion to 3 billion. All right, and it's going to be 12% of the total float share. So it's just insane, guys. All right, so it means that market makers would have to buy 2 billion USD notional of AMC just to stay covered. All right, this is already using the delta. Another thing that is very interesting to see here, guys, and this is just fact, the delta is the probability to finish in the money. That's the definition. And if you want to know, for example, what is the probability given by market makers for example, AMC to go to 100, you just check the 100 strike delta, and you can see, for example, for I don't know, September, so it's column L, so it's 43%, guys. All right, so there is a 43% probability we trade above 100 in September. This is the probability given by the market because the volatility is at 215%. So this volatility has dropped since like June, but it's still very, very high, guys. And you can see, for example, the probability to trade, I don't know, at 145, for example, in Jan 23. All right, guys, it's just 63%. All right, guys. So this is the probability given by the market. This is not a technical analysis. This is a fact. Then this is just showing me that, and I can tell you guys that this is totally unusual. You don't have this kind of option distribution on any stock, guys. So this is the reason why I really believe we're going to have this move up coming soon. Now, let's go back to technicals, and I'm going to show you here. So once again, guys, I changed a bit my counting. I'm going to explain here for me 2, maybe 3 different scenarios. I'm going to try to be quick, but it's important to understand what is happening here. So first, I'm going to take a step back, and I just want to point out one thing, guys. You know that moves up, I mean motive waves, so moves that are going into the direction of the trend, they're developing in 5 waves, and that usually the third wave, they like to take back some major level. Here, we just went through the all-time high during this third wave. So 1, 2, 3. So through the 35 level, then 4, and you know, I really believe there's going to be this 5th wave for this reason, because I think that the trend is going up right now, guys. All right, since December 20. So if this is the case, we're gonna have this fifth wave. Now in terms of levels, so I just use the ratios that are here in the Elliott wave book, and basically it's telling you that when you have a 5 waves move, it can go up or down. The fifth wave is a ratio of 1 plus 3. All right, so either it's equal to 0.618 times 1 plus 3, it's here, you just divide this by 0.618, or it's equal to 1.618 times 1 plus 3. So here, if I do this, if I apply this method, so either here there are 2 different countings, all right? Here I'm being conservative, but if I'm more aggressive, I'm gonna do a 1, 2, 3, 4, 5 here, and then here we're gonna have another one. So let me stay conservative and I measure just from here to here. And in this situation, I put it to the bottom of the force. We have the target I'm talking about for a long time. This is still my target, guys. And I just showed you the option market that for me is a very good sign of what might happen. And I combine this with Fib extension ratios and Elliott wave theory, and this gives me 130. I just want to point out the fact as well, guys, that this is exactly using this method that here I found that we would go to, you see, to the so 68 it's giving me here. So I measure 1 in this shorter term, 1, 2, 3, 4, 5. I measure 1 plus 3, and the 1.618 is here, you know, around 70. So this is how I found that we would go here. So using the same method, we're going to 130. Now we need to analyze, even if it's tough, what is happening in this forced corrective wave. That is very tricky. So I'm going to give you 3 scenarios. So the first one, to be honest, I really don't know which one is going to play out. So I'm just giving you those scenarios, and then we're going to see on the shorter term what is happening to know in which direction we are going. My first scenario is that we have A, B, and C. The only issue with this scenario is that my A wave, so it's here, they should be 5, 3, 5, all right, in an ABC. And my A wave is not really in 5 waves, but fair enough. The C wave is in 5 waves, 1, 2, 3, 4, 5. And whenever we have a 1, 2, 3, 4, 5 with a 1, 2, 3 that is complete, we can use the same technique I just showed you twice. You measure from the beginning of the first wave to the end of the third wave, you apply it to the start of the fifth wave, and you came up, guys, with the different ratios. So either, once again, this one or this one. So it's 0.618 or 1.618 of 1 plus 3. So here it brings us either to 24.5 or to, okay, I don't even see it. Sorry, I had an issue here. Let me take this again. So from here to here, bam. Okay, I don't have the 1.618, but whatever. You can see that the only ratios that here would make sense is the 0.618, all right? So this would go to 24.4, and oh, surprise, how funny. This is as well the level that is given us by the bottom of this fourth wave. So let me go on a shorter time frame, so just you see. When we have different methods coming back to the same level, it just gives more weight to this scenario. And here, the bottom of the fourth wave is here. And usually fourth waves, they like, so this fourth wave here, they like to correct to the bottom of the fourth or the top of the third of the preceding wave counting, which is here, 35 or 24. So this is the reason why 24 for me is a very strong level. So first scenario, we go there. And of course, then we strongly bounce back, guys. And we go to 130, and roughly this should be happening before September, because here we have this trend line that is going to put that if it's broken is going to create some momentum on the upside. So, and this trend line is crossing the 24 level on the 15th of September. So this is for me kind of the worst case, is that we trade at 24 on the 15th of September and then we start to go higher. But once again, like I told you guys, I don't really like this A wave that is only in 3 waves. So, as it was pointed very well, but some of you on my Discord, when we discussed this, by the way, very quickly, guys, I reopened my Discord and I put back some more places. If you want to join any memberships, you can find all the information in the description of this video. And when we were discussing this case, I had a very nice proposal of counting that I'm going to show you guys here, but that is a valid counting. But for me, that has one small issue. That is basically closer to this, not ABC, but WXY. And we often have WXY's correction right now, all right? So instead of 5, 3, 5, we have 3, 3, 3. And what I saw was something like this, WXY. And I checked this very carefully because this is a valid counting. But the only issue I had is that, as you can see, the W wave should roughly be equal to the Y wave, or at least 0.618. And in this situation, the Y wave is to me too short, all right? Because when I measure W, I apply it to the top of the X wave. You know, it should go, if this counting is correct, you know, to 4 or to 20. So to me, this is not working well. And I would rather do, so I don't really like discounting, but what is good about discounting is that this correction would be over here, which is possible. But I have another counting that to me is better, is that you put W here, A, B, C, all right, 3 waves, X here, A, B, C, and then here A, B, C. And in this situation, look, what is good is that I measured the W wave, I applied to the bottom of the X wave, all right, and now I come up with the one-to-one relation showed here, 1-to-1 relation between W and Y wave is actually bottoming at 29, which is roughly where we went. And this is a valid counting too. So I would rather use this one, all right, which is similar. So basically we have two different countings that are both valid, that are both respecting the Elliott wave and Fib ratios. So it's very hard to know which one is correct. If any of those is correct, we're going to find out soon. So we need to see on the shorter term what is happening. So to do that, you zoom in, guys. You zoom in and let's see. Let's see what we have. So first thing that is for me, so sorry, let me go back on the 4 hours. First thing is that here we're having a bullish divergence, all right? Market making lower lows, all right? Clearly from the 15th of July to the 5th of August, and the MACD is going higher, all right? So this is a bullish divergence. It means that the market is out of steam. So this is suggesting that this counting might be actually the right one, all right? This is one more hint. Another hint that we can use, now we zoom in, is that here, guys, we having this downtrend, all right? As you can see, this small downtrend that is here. And we have 35, that was strong support. You can see here supported the price, here as well, here resistance again. That is gonna as well help us to know in which direction we are going. So if we break this short-term downtrend here and we go into the green rectangle here, then this would mean, guys, that, so here we would have first a very nice buying opportunity. Then we would probably find some resistance around this level, and we need to break those two levels before confirming. I mean, not for sure, as you saw, we had some bull traps before, but if we break this, if we do something like this, it would start to look very good to me, all right? So here we're gonna have a lot of buying opportunities as well. On the other hand, if we go lower and we follow the first scenario, we're going to have here a buying opportunity and here another one. So just to let you know that, you know, there is a plan for everything. So here what we want to see to confirm that this counting is correct and that this correction is complete. And once again, it's following nicely the rules, you know, in terms of 3-3-3 and one-to-one relation between W and Y wave. The Y wave being like this, just to make it clear. Bam. ABC. We need to know what is going to happen around these levels, all right? Here is going to be the very important question that we are having. Where is this market going to go? So we need to wait to see more price action. But in both cases, once again, let me come back to, you know, what is to me my strong case is that in both cases we're having here 1, 2, 3, 4, and we're going to have this 5th wave that is, I mean, I really believe it, and that is also, we're going to have here this 5th wave, I believe, and the option market is also showing us something like this is likely to happen. So guys, that's it for me. I hope you enjoyed this video. I hope I managed to explain once again how I build up my views, even if it's tough in this kind of market, how I choose between each scenario, which one is more likely to happen, how I build up my scenarios, respecting Elliott wave theory, Fib ratios, all these things. And if you did enjoy this video, please don't forget to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.